Hamish and Kai Ming here. We're talking about trading up, right, Kai Ming?
Yes, we do. So recent days are still browsing the market. Man, it's been a few months already. I'm still browsing.
Yes, Kai Ming is looking for houses
Yeah.
himself, so he'll share some good insight on the current market.
Yeah.
How does it feel right now out there?
I feels like it's quite hard to say, because on the one hand we know it's a good market to buy.
Yep.
Because everything at discount. But right now,
But selling is
yeah,
a bad market.
yeah, you're kind of like having both market as a bad rate.
Yeah. But the strange thing is, you kind of describe something strange to me as well, because let's say you're trading up and you're selling a house of 1.2.
Yes.
Okay. This is a very strange anomaly here. And this is all very much general advice, okay? So, talk to a financial advisor like ourselves for really, specific advice. But imagine you take a hit of 10% in your mind.
Yeah, it's for the remote areas.
So for the one you're selling, you've taken a 120k hit.
Mm.
But the one you're buying, that one there, they've taken a 200k hit.
Yeah.
So in some sense, trading up
It makes sense.
looks kind of good here, right?
Yeah.
So that's a strange way of looking at it. But I think the key thing here is that in a very flat market, which it is,
Yeah.
it just trading up just means that you can know where you stand.
Yeah.
Okay, and you've been doing a lot of homework. And Kai Ming, when you're doing your homework out there, tell us, how are you working out what a house is worth? The one you're selling or the one you're buying? What are you looking at?
So you mean the properties I'm looking at, the features or etc.?
No, just how are you trying to get to the value of something?
The worth of value, I normally just looking at the suburbs and location of that.
Mm-hmm.
Yeah, whether it's in a good area with good schools, etc.
But the data?
Normally I'm still referring to the CV price, and right now there's quite a lot of properties.
And you know what? Everyone does. But
Yeah,
I always
true.
try and teach you that don't. Because if you're selling or buying, you have to focus on the actual sales data.
Yeah.
Right? So you need to see what is actually sold this week
Yeah.
for the one you're selling and the one you're buying.
Yeah.
You have to almost pretend like you're going to do it right now, that you're going to buy your own home or you're going to buy the next one already. And you look at the auctions and go, right,
Yeah.
this is what it's happening.
Actually, that's something I learned afterwards, is when the real estate agent proceed just get in touch with the vendors and telling them what's a realistic price of that. They are using the same way. They're using comparable sales data
Yeah.
to give them an idea how much maybe your house will be valued and sell
Yeah.
for.
Yeah. So that's an important piece to do your homework in. The other thing, we've done we've helped a lot of people trade up. It's
Yes.
very fashionable right now.
Yeah.
We've done the odd bridging finance, right?
Yeah, quite a lot.
And what does bridging finance give us?
So kind of like a bridging finance, like the name shows you, it kind of like give you the bridging of the property you are selling to the one you are going to buy. Because right now, everyone knows it's a slow market. Selling, buying, everything is slow. So if you find a property that you're really keen to buy, sometimes it really depends on whether it's too hard to find your dream home. If it's really hard for you to find a dream home, then I would say if you find it, just go for it and let the bridging finance help you giving a hand.
Yes. I would differ though. There is some risk.
Yeah. Yeah, sometimes, yeah.
And the risk, I think the risk is that if you, look, we can do bridging finance, but the risk is if you buy first and then the market dips a bit more, and you sell this one later,
Yeah.
if you take a hit on this, suddenly you
Yeah.
could be like, wow, I didn't realize, but I'm going to carry 100, 200 grand more debt.
Yeah, true.
And so that risk, now obviously the honest way, the best way to get around that is just to not use bridging finance. Actually.
Yeah,
and just sell first, right? So that's just basically sell first here, and not sell after.
Yeah.
However, we can get an approval subject to you selling.
Yeah.
right? So we can get that way early on.
Mm.
So, yeah, that's another thing.
Yeah, but I would say, like Hamish said, it's just a matter of how safe you think, because we are dealing with risk and uncertainty. So that's the reason why we have the bridging here. If everything is certain, you know how much your property can be sold for. You know how much you can get from the property, and you can use that for the future properties, your future homes. Then that's totally fine. You just go for it. That's the safest way to do that. But just in case, like I say, if everything is uncertain, you don't know when you're going to find the next property that's as perfect as this one, then there's the option.
Yeah, and that's what people like to use it sometimes. But always, before you sell, obviously, get a pre-approval in writing.
Yeah.
Right?
Yeah.
So obviously, because we don't want you to be in a situation where you're like just buying and selling for the same amount, the dates don't match, and then suddenly we can't get you that approval.
That's a mess.
So
that's really a mess.
Definitely get your stuff in writing first. Yeah. Any other thing we can think about in the last few months? We've been doing a few of these that has come up often.
Yeah, actually there something when the client reach out to us for the bridging finance. Sometimes they are not really sure how the bank see the applications, because that's a slightly different.
Yes.
Because technically you sold the property in the end, your current home in the end, and you happily move to the new properties.
Yeah.
But from the bank's view, you're carrying two loans
temporarily.
For normally up to 6 months maximum.
Yep.
So how the bank calculate the repayment and whether they confirm whether you are able to afford so much loan is quite different to the normal one.
And normally they look at, the beauty is some banks can look at what the debt will be after the sale.
Yes.
And focus on that and give you a little bit of breathing period in between, and also give you interest only, right?
Yeah.
To carry you through.
But one thing you need to remember is when the bank see there's interest only period, right, on the bridging finance, but the bank want to see whether you have enough money
to cover the shortfall that time. Like savings, for example, to pay both mortgages temporarily.
Yes.
The other thing is also, you asked me what happens after if they can't sell.
Yeah, that's something I worry about, because you're having two security with the bank. You can't
technically, let's say you've got a 6-month bridge and you can't sell, what happens? Technically, legally, the bank can force a mortgagee sale.
Yeah, true.
Sadly, if they want to, on both properties, right? Because the
yeah.
terms of the loan is you need to pay that loan back.
Yeah.
Now, I'm not going to say that banks can be flexible and work with you on that, because in tough times I've seen some banks be very harsh on that deadline.
Oh man.
So don't assume that the bridging can be carried forward, okay?
Yeah.
Right? So bridging deadline is a deadline, which is why I think it's safer to sell first, buy with the right thing in writing, and worst case, have an Airbnb solution in between. Or also with some of these moving companies, they can also do storage. Okay, so there is some options there, but yes, it sometimes can be a bit more, of course, uncertain and troublesome that way, but it means that you're selling your house without any restrictions.
Yes.
To the biggest pool of buyers, and you're buying something with less restrictions.
Yeah, true.
You can alternatively, because right now when it's more of a buyer's market, you can dictate more terms as a buyer for the one that you are buying. So what I mean by that is, you could go up to a client, to a property, and say, look, I will buy your property subject to selling mine. Okay. Alternatively, you could sell your property subject to you finding another one to buy. It's harder though, because in a buyer's market, because you're restricting, if you've got not as many buyers, you're restricting the pool of buyers even further, because how many people are going to wait?
Yeah.
Right. So it depends on the market around that type of stuff, but
yeah. Sounds like in the end, I'll still go with the original style. I'll sell first. After I get the money, I'll buy another one. Because there's so many things to concern about. Yeah.
Cool. Well, thank you for watching. Hopefully that's been insightful. And Hamish and Kaiming, mortgagesonline.co.nz.
Yeah.